Mayuresh Joshi, what is your sense? Do you think best of the gains for summer of 2023 or monsoon of 2023 are behind us now?
Afternoon, Nikunj. I think two aspects. One, I think the entire downgrade scenario that is getting played out in the US markets is getting played in the world markets. And the markets needed some sign or an excuse to probably correct. Obviously, excesses had got built into the market as well as we were hitting our all-time highs. And somewhere, I think with this reasoning, I think the market has had its fair share of correction. Now, to a certain extent, a lot of sectors, Nikunj, are still holding out in terms of how we track at O'Neill the distribution day pattern. And though on the index, the distribution days are stacking up, the broader markets and the broader indices at the sub-index level, they are largely holding up above their key moving averages. To a large extent, I think it is profit booking, which has been extensively done. There is one element of the market which is probably saying that China might recover. But all the data points that we are probably getting in from China, whatever that is, are still indicating that the recovery might only happen in the second half. So our sense is that the markets might just settle down after the big correction that we've probably seen. And a typical sectoral rotation will be at play. We've already seen Pharma starting to hog the limelight. So more defensives will probably come up in terms of the sectoral rotation as we consolidate over the next few years.
What has changed for Pharma? Is it just a catch-up rally or the fundamentals have also changed?
The two aspects here, Nikunj. One, I think there has been a clear case of under-ownership compared to the other sectors. I think the consensus sectors, including the likes of infra, construction, defense, financials, were very, very heavily owned. As the market is now probably getting into a more corrective phase, where valuations are probably getting off at this juncture and where a little bit of a derating is happening in terms of forward multiples. I think under ownership and valuations, which were reasonable for the sector as a whole, are obviously aiding. The second element obviously is numbers and commentaries from a lot of managements. US markets seemingly looking better. Pricing pressures are definitely coming off. The expectations in terms of new product launches with a lot of FDA resolutions expected to come through. And as they are coming through, with a lot of EIRs that you're probably witnessing for the sector as a whole, is probably expected to ensure that a lot of ANDAs and niche offerings start coming through most of the plants which had got affected, which might also propel US sales in a much healthier fashion going forward. And with margins expected to stabilize and improve with this mix going forward, the bottom line growth can be far better than what we've seen in the last few years. So I think those are the clear-cut tailwinds that are aiding the sector as well.
Take it across with Mayuresh as well. Mayuresh, hi. Good to have you. Just wanted to begin by asking you about Dixon Tech. That's flying away in the trading session. And tell me one top bet from the pharma space.
So, Anisha, afternoon to you as well. I think as far as Dixon is concerned, I think the news which probably came through early in the afternoon in terms of having an import ban, in terms of laptops, mobile phones, and other electronic gadgets and accessories, I think that is what has spurted the stock in terms of today's trade. The second element also is that it has got huge orders coming through, both in terms of laptops. They are probably the front runners in terms of Acer laptops, 5 lakh capacity order. Expectations in terms of mobile phone manufacturing, LED TV manufacturing, and therefore I think the entire ecosystem that we probably got in terms of the backend required for electronic manufacturing, and with the ban that is expected to take place, it becomes a keen and a clear beneficiary going forward. The second element, obviously, in terms of Anisha and their business outlook as well, is that the ODM part, which is the original design manufacturing part, is expected to grow up significantly, both for Dixon and Amber. That's a relatively higher margin business. And there, I think the order wins from existing clients and prospective ones is getting up as well. With operating leverage playing through, even margin improvement should be obvious. So I think a lot of tailwinds in terms of prospective earnings for the stock itself.
Sure.
From the pharma pick, supply is something that we like. Our take is that numbers have been exceptional so far. Margin guidance has been up.
Right.
Expectations in terms of more inhalers coming.
Sorry, Mayuresh, interjecting you there because numbers for Zomato are hitting the screen and it's a bit of a pleasant surprise because the company has managed to report a profit on the bottom line. The street was expecting a loss to the tune of 150 crores, so a big beat coming in versus expectation. And the profitability seems to be driven by the losses being narrowing in the associates of the company, because I'm looking at the consolidated earnings of the company. The revenue is largely okay. What's really giving it a fillip is the fact that the loss from associates has gone down, giving you the hint that whatever was the burnout that was expected on the likes of Blinkit, etc., that is going out, and that's the reason that stock is reacting very, very positively, sharply. Mayuresh, to begin with, you have a view on Zomato?
Yes, I think the numbers have been pleasantly surprising, Anisha. I think the bottom line is not something that a lot of people were expecting. I hope there are no one-offs. I'm just trying to open the press release. So I think apart from adjustments, I think if this bottom line is coming through, I think it's a clear disclaimer from the company's side that they will be also profitable before the September quarter, and they are probably doing that in the right spirit. You're absolutely right. I think in terms of the accumulated losses from Blinkit, at some stage, I think the consolidation on cost efficiencies that the management was carrying out was expected to play out. And a large element of the profitability has come on the balance sheet. And if this sustains, you'll see a re-rating even from the current levels. I know the stock has moved up significantly, but if this is to sustain and the management commentary hints towards this, you're probably looking at a re-rating candidate as far as Zomato is concerned.
Wow, a re-rating candidate, despite the fact that this year has been quite stellar for Zomato, and we have seen a massive run-up from what those levels of 40 thereabouts that the stock was trading at the bottom, around 45 bucks, I think end of last year. That's managed to double in a matter of a few months. And what Mayuresh is saying, if this kind of performance really continues, it could be a further re-rating candidate from here on. The stock is already up 4% on an intraday basis. Mayuresh, your take on the entire NBFC micro lending kind of space, because that's seeing quite a bit of perk up as well, and even the specialized lenders. Now, whether it's a IRFCL in terms of railways, RECPFC in terms of power infrastructure, or the housing finance company and micro lenders, everything is doing well. Is there a way one can differentiate in what segment is likely to do better versus the other? What should be the pecking order for investors?
So out of the lot that you spoke about, Anisha, I think MFIs clearly seems to be the space where earnings are holding up pretty nicely. Even if you look at the YOY or a quarter-on-quarter performances by Ujjivan Small Finance, you could probably look at Equita Small Finance as well, 5-Star, Ugro. I think all these small finance stroke microfinance banks lending to the MSME sector, microfinance sector, home loan sector are doing exceptionally well. And 2-3 things which are driving it. One, I think on a quarter-on-quarter basis, you've seen collection efficiencies go up quite significantly. Asset quality pressures have come off quite significantly over the past few quarters. Balance sheet strength is very, very strong, which means that the lending capacities for all these smaller banks are still expected to grow quite significantly. Rural economy is showing green shoots at this point of time, and hopefully if rains sustain in the second half as well, you're going to see a huge bump up in the second half as festivities return, where these bankers will probably enjoy the roost. At some stage, I think as rate cuts come through in the next financial year, we're expected to see more synergies getting driven down as yields and spreads will stabilize and expand going forward. So I think it's a very, very interesting space. Earnings have held up, and largely second half should also see earnings holding up for these small finance stroke microfinance banks.
Okay. Separately, what's coming under pressure, Vedanta, of course, that deal is having an impact. Godrej Properties, wherein the start of the year has been a bit subdued. As far as the earnings are concerned for Godrej Properties, Kanza and Nerolac did not enthuse the market with its earnings at all. So that stock is down about 5%. And then Interglobe Aviation, a bit of a profit booking, a sell-on news given the fact Q1 was bumper. But going forward, it's going to get turbulent for them. Let's see where it heads. And then Delta Corp, of course, on account of that GST being held at 28%, is seeing a bit of a slide. You know what, Mayuresh, what's your view on the entire paints industry? I know it's not the most seasonally strong quarter, but historically people do use such opportunities to buy into these names as well. Whether a Kansai, whether a Asian Paints, would you buy into these names, or given the impending competition and more players coming in, it's time to maybe stay away?
Competition will persist, Anisha. I think there's no two ways about it. But there is a lot of opportunities for all these players going forward. If you see the numbers, I think the volume growth has been quite reasonable enough. Second half obviously is expected to be very, very good. Expectations again, crude bumping up a tad bit from what we've seen in the past few quarters will mean that the price cuts that we normally expected might not happen quite significantly, which means that the margins might get protected. But to a large extent, I think volume stroke value growth should continue. Obviously, leaders like Asian Paint might continue doing well. But at Markets with India, we like Indigo Paints at this juncture, Anisha. Both the EPS RS rating looks extremely strong. Expectations in terms of volume growth, specifically in the categories that they cater to, niche categories, which includes your enamel paints, wood paints, ceiling paints.
Okay.